Hello, bloggers, ladies and gentlemen. Today we have one of our regulars and one of our favourite companies on the ASX, Australia's premier leading space where you could connect and look after your pet for all pet services needs, from dog walking to getting medication for your pet. It's Mad Paws Limited, the ticker's MPA. Justus, welcome back.
Thanks for having me.
Always a pleasure. Now, we have to kick off by starting a big congratulations. Mad Paws has finally had its first operating quarter of free cash flow. Do you see the momentum continuing on?
Yeah, absolutely. I think we've had a great quarter, as you said, operating cash flow positive, but also I think even more so, that we always had the target to get to EBITDA positive, and we've done that. September was our first EBITDA positive month. Particularly good for us in a not significant seasonal period. Normally Q2 is the strongest period for us, which we're in now. So, it was a great achievement for us to kind of get it over the hump, get our first EBITDA positive month. And now we've kind of rolled into Q2 with some very positive momentum.
So in terms of market share, where's Mad Paws at in compared to its peers, and how much could it potentially gain over the period of a few years?
Yeah, so I think Mad Paws got a quite unique position in the market, right? So, I think our crown jewel and our differentiator against kind of the traditional retail players in the marketplace is the market in the pet market space is our marketplace. So this is where we've got 40,000 pet sitters on the site. We're clearly the number one by kind of 2.5 to 3 times to the second competitor in terms of size. And it's one that gives us a huge differentiator over your traditional retail players, right? So, and the biggest difference here is, it's a very attractive business with a lot of moats, hard for somebody to come in and overtake us. But the key thing really for us is here data. And, we're collecting a lot of data through the marketplace. And people are willing to give us that data because they're looking for the perfect sitter, right? So if you look for somebody to look after your pet, pets are part of the family now. So you want to make sure you find the right person. So people are sitting down answering, 10, 15 minutes of questions about their pets. So, do they have any behavioral issues? Do they have anxiety? Do they need any medication during the time of the sitting? And all of that obviously helps us to then retarget those customers with the other offerings that we now have. Like I said, marketplace on the one side is obviously very profitable already. We're running at high 30s in terms of EBITDA margin now for the last quarter. But it gives us that ability to cross-sell into our retail offerings as well, right? And we've got Pet Chemist now, number one online pet chemist in Australia. And we've got a huge opportunity here to cross-sell our marketplace customers into those other offerings. And I think that's where we're going to see a lot of growth for the business.
So in our opinion, you guys are extremely undervalued, particularly after achieving your first cash flow result, first positive cash flow result. Why do you think Mad Paws is underappreciated by the market, in your opinion?
Yeah, I'm always careful to kind of judge the market, right? But I think the market in general is kind of quite tough at the moment on your smaller caps, right? People are looking up for security on kind of bigger caps, and I think we're getting kind of the bad side of that at the moment. The pendulum, of the public markets has obviously swung from extreme risk, just 2 years down where everything was about growth, to now kind of the safe haven of bigger businesses. And I think, at some stage that's going to normalize again, and we're going to be looked at as the opportunity that we see for the business. And so, everything that we're trying to do is kind of focus on the business, make sure that we get to profitability in the very near future, which we're very close to, and deliver on that promise. We still see a lot of growth for the business, and I think that's kind of one of the main achievements that we've had over the last 6 to 9 months, is kind of balancing that growth versus profitability piece. We didn't screech to a halt here in terms of growth. We're still growing, mid-30s, 40% year on year, and we see that kind of continuing that momentum. So found a good balance, I think, between growth but still showing the market that we can get to profitability in the short term. And so, at some stage, I think that will pay off.
Now, we're well aware that Paws has a good relationship with Qantas. We feel that's quite important because it gets your brand out there. Is there any other potential out there, maybe like a Flight Centre? I'm just putting names out there, in the travel industry or any other industry that you could potentially partner with to get the Mad Paws story out there?
Yeah, look, we're always looking to find kind of new partners, and we've partnered with a couple of companies. Qantas, obviously one of the big ones that you mentioned there. We're in the checkout funnel. So if you made a Qantas booking, check your manage your bookings page, and you'll see us on the bottom there to find a pet sitter. That it helps us in two ways. One is obviously traffic, people coming and finding us, but on the other hand, also trust. Building trust, I think, for the marketplace was always a key challenge for us, and Qantas was a great partner to kind of get us over the hump there. There's and we're looking to partner with any companies out there that have bigger databases. There's nothing I can talk about now, but we're constantly on the hunt to find new partnerships. But I think the biggest opportunity for us now in the short term is really kind of our cross-sell, right? We've seen cross-sells already grow over 66% year on year from last year to this year. We still only have 10% of our customers being multi-vertical customers, right? So only 10% are customers of the marketplace and one of our other verticals. So this is where we've got a huge potential to increase the share of wallet and therefore kind of get additional growth for the company.
So what do investors I'll say that again. What do investors have to look forward to? We're heading towards profitability, I see. Would that be organic growth, or is there potential acquisition? What are your thoughts there?
Yeah, so I think at the moment we're kind of focusing on what I said, cross-sell and still maintaining growth. We're in the biggest quarter, in terms of growth for the company traditionally in Q2. So, we're obviously executing on that strategy. I think what you're going to see as from an investor side, we're pushing now really hard to kind of the consolidation of the different verticals that we have under the Mad Paws brand. We've relaunched the new Pet Chemist website in the last couple of months, which already has seen some uplift for them. But that was kind of the foundation that we needed to now consolidate Pet Chemist as well as the Waggly business, or even Sash, kind of under the Mad Paws brand. So you'll see a lot more activity there. And then we've always been interested in M&A and certainly still are. So, we think there's some good opportunities out there for us to grow from an M&A perspective. There's nothing in the pipeline at the moment, but it's certainly something that we look at, and we think there's a couple of puzzle pieces that suit our business really well, and would deliver more services and products, along the life cycle for pet owners, and that's what we're after. So, stay tuned. I think there's more happening on that stage.
Oh, we will be. We're big supporters of Mad Paws, as you're well aware, and we see plenty of upside. Also, thanks for your time. We'll chat again soon, and congratulations.
Thanks so much, John.
Cheers, mate. Bye.